Frightening hit to silver in September. This is going to be painful. Everyone is excited about these rate cuts coming in September. Everyone is waiting for this boost in silver prices and gold prices. Well, in this video, I'm going to break this down. I'm going to show you we are going to hit a wall for silver in September. Look at this. This is from mining.com, and it says, silver looks ready to rip. That's how we all feel. We all feel that silver is ready to rip. Last Friday, the United States Federal Reserve Chair Powell, he said that the time has come. We've been waiting for this. The Fed's meeting will be September 17th to 18th, and we should be seeing right here 25 basis point cuts, or even 50 basis point cuts if you're really feeling optimistic. And this, again, we've been looking for this and waiting for this. And we already see, look, we see gold, of course. If you're buying gold now, if you're possibly able to reach for gold, you're looking with a premium, you're looking at about $2,600 for gold. So silver lags gold. Silver should be following in gold's footsteps. The gold rally right here, the gold rally started in mid-February, and it's underpinned mostly by increased geopolitical risk, which we still have, central bank buying, which we still have, and slowing ETF sales. So gold is continuing, but I'm going to show you where silver is headed. First, hit that subscribe button, hit the like button. It really helps to get this information out there. It's so important. There are many silver stackers that are new to stacking silver. They need information. They need to know what's going on and how to go about it. Hit that subscribe button and the like button. So look right here. Of course, China and India have come back in. There was a month or two where China had slowed down consumption of silver, paper, and the actual silver metal for solar panels and for EV. But China is back and they're buying up silver. So we see these charts and we see that boost in May. Everyone was excited. Now we see it coming back down and we're hovering. We even dipped a little toward $26. Now we're hovering at that $30 mark. So yes, the narrative is that these cuts coming next month in September will be great for silver. But if you've been stacking silver as long as I have, and many of you have, then you remember what can happen. I'm going to show you in a minute. Look, the undervalued silver. Silver and gold largely move together. So silver should be coming up with gold with this $2,500 price. It says it's mind-boggling to see that silver is still below $30. It's obviously way off its 2010 highs, and we would love to see it get back toward that $50 level, of course. So the silver to gold ratio is the first part that we look at. We're about, look at that number there, we're about 85 to 1. That means 85 ounces of silver will get you 1 ounce of gold. Now, it's not always like this, right? This is according to Sprott Money. A breakout is coming because silver cannot continue to be so undervalued compared to gold. That's true. Using a median gold to silver ratio of 80 to 1, 80 ounces silver to 1 ounce of gold, a gold price of $2,300 implies a silver price of $2,875. That's what it says right there. If gold reaches $2,500, as it has, maintaining that same ratio means $31.25 for silver. But the thing is, and look at this, the thing is, when silver breaks out later this year or next, it will receive the same rush of attention and speculator cash that gold is currently enjoying. As such, the price target will not simply be 29 or 31. Instead, the initial goal will be $35 and higher. And this is what we're all looking for. That's the pattern of silver that we want to play out. But there's something else coming at us. Here, according to Investopedia, same. They go back to the 20th century. Gold to silver ratio, can you believe this? 47 to 1 right there. It was 47 to 1, 20th century. In the 21st, we were looking at an average between 50 to 1 and 70 to 1. Still, we dream of those days. And of course, we went up to a high of like over 100. And the lowest was actually 2011, 35 to 1. Man, if that would just come back for a week, you and I would be swapping out our silver before you could even blink your eyes. You'd be swapping that silver out for gold. 35 to 1. Can you imagine? 35 ounces of silver for 1 ounce of gold. So, you know, that's what we think of. But really, right now, we're at 85. Now, here's what can happen. Here's the wall that can hit us in September. Those rates come down. People have been waiting and waiting to jump on real estate. They've been waiting for a year, 2 years. because the mortgage rates are so high with this high interest rate. So they're waiting for it to come down. When that interest rate drops, people are going to jump in on these properties and this real estate market that they've been waiting to get in on. The other thing that's going to happen, and this is not new, this happens historically when we see a drop in interest rates, is people take more risks. They take risks, yes, and real estate. They jump into real estate. They also take risks in investments in general. Entrepreneurs start making moves that they've been waiting to make a move on because they haven't been able to take on loans with these high rates. Now the rates are going to drop. They're going to be able to jump in on those loans. Banks are going to be able to offer more loans. They're going to take more risks. So it's more the mindset of taking risks comes back into play, and that's the opposite. That's the complete opposite of stacking silver. So look at this, historic trends. Historically, real estate and precious metals have often moved in opposite directions. When real estate markets thrive, indicating strong economic growth, which is where we're at, investors tend to prefer riskier assets like property over safe haven assets like gold. Conversely, during real estate downturns, as seen in the 2008 crisis, gold prices soared because people needed that safe haven. Recent trends have also shown that in times of real estate market volatility, there's an increased interest in precious metals, reinforcing their role as a hedge against economic uncertainty. So what we're going to see in September is people buying up that real estate, people pulling from the safe haven of precious metals. They don't need that safety anymore, and they're going to be willing to take more risks. That's what happens when the rate comes down. So yes, it is exciting. We all want our cake and eating it too. Of course, we want the low rates, and we want, as silver stackers, we want to be able to see some kind of return on all of that, all of our fiat currency that we're swapping into this metal. Of course we want that, but we need to watch out for these walls. Hit that subscribe button, hit that like button. I post 2 videos a day. It's really important to get this information out there. Hit those subscribe buttons and like buttons, and I will see you in the next one.